So as of a few hours ago, the Federal Reserve just increased interest rates by another 25 basis points to the highest level we have seen in over 15 years. And much of what they said in this meeting was unexpected and is going to have massive impacts on your money moving forward. Jerome Powell started off this meeting by addressing the whole entire banking collapse and banking crisis we have seen with Credit Suisse, with First Republic Bank, with SVB Bank, and everything else going on. And after that, he talked a little bit about the impacts of the credit crunch, what's going to happen with inflation moving forward, and are they going to continue raising rates for the remainder of 2023, or are they going to even start reducing rates? So I want to go over the most important parts of this meeting in today's video and catch you guys up to date. So what we saw at the beginning of the meeting is that the Federal Reserve raised interest rates by 25 basis points. And like I said, this is the highest we have seen interest rates in over 15 years, since 2007. And at the beginning of the meeting, there were a few things that stand out. In the report, we could see that there was a key difference between last month's report and this month's report. One of which is that in this FOMC report, it said that inflation remains elevated. This was a key distinction from last month's report where it said inflation has eased but remains elevated. They no longer have said inflation has eased. They simply said inflation remains elevated, which is a bit hawkish, a bit just bearish as to what is going on with inflation. They're saying, look, it's continuing to stay high. It hasn't really gotten any better over the last few meetings. And we've seen this not only in Europe and countries all around the world, but continuing in the US. Things are continuing to be a bit sticky with inflation, holding higher than people would like. In addition to this, Jerome Powell started off talking about what is going on with the banking crisis. This is how he started off his meeting. And in the meeting, he basically started off by saying, look, with the banking crisis right now, it is too early to tell how this is going to impact inflation moving forward, what the impacts are going to be on consumers, on large institutions. He said right now it's only been a few weeks since we have seen the collapse of SVB Bank, what has been going on with Credit Suisse, what's been going on with First Republic Bank, what's been going on with their new banking program. He says it's too early to tell to exactly know how this is going to play out, how it is going to impact inflation. Now let's switch gears a bit and talk about QMall, because over the last few months, I've been doing a lot of my leveraged crypto trading on QMall. It's an EU licensed Ukrainian crypto exchange that is available on mobile and desktop. Its price increased more than 40x since it launched. And recently, they had a few major announcements that we need to touch on. First of which is that it was just recently listed as one of the top 5 most profitable assets in 2022. This was an independent company from CryptoRank, and it lists and talks about QMall as being one of the best performing cryptocurrencies for the last year, as it did increase over 40x since it first launched. In addition to this, with QMall, as I have been using it for my leverage crypto trading, there are a few additional things that have been launched on it as well. For those who aren't familiar with the platform, they allow you to do leverage trading for Bitcoin, Ethereum, many altcoins, and also some of the cooler features of this platform, in my opinion, are that they have a launch pad where you can see up and coming projects take part in new and up and coming projects. They also have an NFT platform where you can see all these different NFT collections, and a lot of these proceeds go to help funds and people in need. And the third is going to be their P2P feature, which just recently launched, which allows you to trade cryptocurrency between users directly instantaneously. So recently they've had a lot of major updates and new features roll out on this platform. I primarily use it for leverage crypto trading, specifically leverage Bitcoin and Ethereum trading, but they do have a number of other features. And for those of you who are looking for just an up and coming crypto exchange, or you're looking to trade crypto, I would definitely check this one out. We've talked about it quite a few times on the channel. And after I saw this article, which said it was one of the top best performing assets in 2022, thought we should do a bit of an update, touch a little bit more on that. But ultimately, he said he does expect it to have a bit of a credit crunch, make it a little bit harder for people to get credit, use this money, and that should have impacts on the economy, making it so people aren't spending as much, help bringing down inflation pretty substantially. So he said even though they can't factor in this entirely, he does expect this to have a positive impact on inflation and therefore bringing it back down. He said a credit crunch is almost like another rate hike. It is factoring in the same way as it is going to make it a little bit tighter and a little bit harder for consumers, businesses to just spend money in general. After he talked about the banking crisis and everything going on there, which he says we need to wait and see how it plays out, he goes on and talks about inflation. And with inflation, he specifically addressed a few key things. First and foremost, which I think is the most important, is many top analysts and economists were expecting that we were going to see potentially rate cuts at the end of this year. We were factoring in at least another 25 basis point rate hike in the next meeting. But after that, people were expecting that we could potentially see rate cuts towards the end of 2023. And right now, Jerome Powell says that the base case, what they are factoring into their economic models, is that we will not see rate cuts in 2023. And this is a key deciding statement that he said, because ultimately what it shows us is that prior to everything that went on with banks, prior to everything that went on with economic data, the economy is still too strong and inflation is just too sticky right now. So ultimately what he's saying is moving forward, it's not time for us to even consider or think about or plan on cutting rates. He says inflation is too high and their ultimate goal long term, and it's going to happen, is to bring inflation back down to 2%. He says it doesn't matter what it takes, how long it takes, preferably they want it to happen a bit sooner, but ultimately they are going to get inflation back down to 2%. In addition to saying that we do not see rate cuts in 2023, Jerome Powell also goes on to say that they could potentially raise rates even higher if necessary, because right now they have factored in certain target rates for the end of 2023, and many people expected those to remain the same. But according to what he said during this meeting and addressing many questions that he was asked, he ultimately said that moving forward, that they could raise rates higher than initially anticipated. This is all going to be based off of economic data and what is going on with the banking crisis, because with all this credit tightening and the credit crunch, he says that could have impacts on inflation, help bring inflation back down, and then they could be like a wait and see. But right now he says that they do plan on at least having another rate hike, probably around 25 basis points. That's what it's looking like according to projections. They plan on not cutting rates in 2023. And depending on the economic data, he says that they could potentially have to do some additional policy firming. He specifically said some additional policy firming may be appropriate. So ultimately, what it looks like right now is things are a bit hawkish. People were expecting that maybe they'd hold off, maybe they'd say they don't need to increase rates, they just sit back and wait. But ultimately right now, they are not pausing, they are not cutting rates, and the potential right now is to have at least one more rate hike and potentially increase those depending on overall economic conditions and what's going on with the banking crisis. So these are the key highlights which Jerome Powell said in his meeting earlier in the day, and things you need to know if you're an investor, because higher inflation, higher interest rates, all of this could have negative impacts on the stock market, on crypto, on mortgage rates, and just the entire economy in general.